Good morning, friends. This is the morning update for 30th of September 2020 for our webinar participants. Now, let's first quickly have a look at how the overnight markets have closed. Uh, SP 500. So, S&P 500 has found resistance at its 20-day moving average and has basically taken out the previous session's gains. Now, this is very relevant because if we start to get follow through below this red bar, that would mean that the market has started to turn and will likely break these recent lows. And that would be a reasonable expectation because this is an uncertain sort of month, and basically before the US elections are done, the markets are unlikely to rally very sharply. So, that being said, Nifty, first of all, FII data from yesterday shows a 1400 crore sell number. So, in this entire move, there has been zero FII buying. So, basically, this thing is being held up by short covering and you know retail money. A bit of DII buying has happened, but DIIs like to buy at lower levels, so that will create a problem in the market going further. Now, what will happen today? From what we can see on the SGX, you are likely to open around this zone. Basically, yesterday's high around 11,280, and from there, I would think that you should have selling resuming again because there are sellers which are sitting in this zone. So, if we need an approximation of where we could open, I would look at R1 as a possible area, which is about 11,290 for today. Similarly, Bank Nifty could also open with a gap up, and that is the weaker index. So again, out there, we should expect a selling from the high. So from 21 580, this sort of zone, we could face some selling. Let's see where the R1 here is. The R1 here is about 21 715. So basically, it is about this level that we are expecting the market to gap into and then start to see a sell off. See, the issue is very simple. Is the market going to move further or is it not going to move further? The first hurdle is that there is no FII buying. So 11,300, 350 is a very significant zone. I think I had pointed out in a video yesterday also that 11,350 is a very critical zone. So the zone starts from 11,338 to 11,371. So each time we go here, we are likely to see a sell off. So today's gap up based on price action should be used to sell into the market. What sort of price action you could have? The price action could be you have a green bar and the very next bar is a red bar, and from there the market starts to move lower. So once you get this, your stop is here and you start to trade it on the downside. So this is what the trade plan for the day is. So if the market follows our script, then you have a trade on your hand. If it starts to do something else, then we wait and see what happens. Basically, in terms of sectors, I think financials are clearly down and IT, pharma, it could show relative strength. But yesterday, even IT came off by end of day. See, this is a zone where bulls and bears are having a fight. This is the IT index, 5-minute chart. So finally, one side will win, and we have to see which is that side. This is the bar formed on the daily chart of Nifty IT. So it'll be very critical if we are able to take this yesterday's low out of basically 11 180 200, then you will see a further decline starting out. So today's day will be fairly crucial on individual stocks. Like I explained yesterday, you have to choose your trades based on where they are relative to the averages. If your averages are bunched together, the 20 and 200, you are playing for expansion. If their averages are far apart and you have a sharp upside, then you have to wait for the first of red to appear plus see previous action confirmation, some previous day high or some previous congestion from where you have to see a downside. So that should be all for right now. Let's see how the markets play out. But overall, 11,300 seems to be a difficult level to get past. Take care, trade carefully, and I hope you have a good day.